this is a common question. Why is it that I get to have guaranteed growth in cash value every year? What's causing that growth? I tell people that it's both, you have both a sort of a mathematical and a legal guarantee. So if you consider the cash value is the difference between the death benefit and all the premiums you've yet to pay, both discounted to the present. So if you continue to pay premiums, your cash value, which is the difference between the death benefit and the premiums you've yet to pay, must increase. And so really at some level, it's an accounting identity. As you pay premiums, your cash value will go up. Now in practice, the thing that causes the cash value to rise are dividends and interest, but mostly the dividends. See, an insurance company at the beginning of the year will look at how much money they have, what they can invest in. They'll overestimate their expenses and they'll underestimate their projected investment performance, such that by the end of the year, the insurance company has this surplus. They've been able to receive more than they've paid out. And because policy owners are company owners with the mutual insurance company, the company owner, again, the policy owner, gets to participate in that surplus financial performance. And they do that through the receipt of a dividend. So the company will pay a dividend to the policy owner. And the individual has full control over what to do with that dividend.
Yes.
Now, if you're practicing the infinite banking concept, if you want to see a cash value grow as much as it can over the life of the policy, then you take that dividend and put it right back into the cash value through a premium payment called a paid up additions premium payment. And so that's really a lot of what causes the cash value to continue to increase. And people will ask, I got this question the other day, is there a guaranteed interest rate growth in the cash value? And, nothing can be guaranteed in the future, and the interest rate will be what they'll be. But an important feature here is that the individual's behavior is what will determine the growth of the policy over time. And that, again, is a lot of power, a lot of control that the individual has over the financial value that they control in their lifetime.
What causes a growth in the cash value of a dividend-paying whole life insurance policy? The actuaries overbuild the policies, like you said, overestimate their expenses, underestimate the portfolio returns of the company and the loan performance. And at that time, the end is, the surplus that's paid out as a dividend. There are really two components, right? There's a guaranteed cash value, right? There's a guaranteed interest rate to that, a minimum anyway, and it goes up, right? And then the dividends, a surplus. There are only two types of life insurance companies in the world. There are stock companies and mutual companies. The owners of each company get the profits, if any, of the company. And that's Economics 101. Right? Well, who owns a stock company? The shareholders own the stock company. It's a stock company. They issued shares of stock, right? And that's really how they raise capital. So the owner of a stock company, he gets the profits of the company through dividends or a stock appreciation. The value of the stock goes up and he sells it later. Well, who owns the mutual company? It's the policyholders that own the mutual company. So the dividend, which represents the experience of the company for that year, is paid to the owners of the company, and it's paid in the form of a dividend. And we've talked about dividends before, how they're classified. Oh, it's a return of premium. So it's in
fact, we're going to talk about it some more too.
Oh, okay. Well, I'll wait till later then. But then you also mentioned the dividend options, right? I can take the dividend in cash. I can leave the dividend on deposit at the insurance company and they'll pay me interest on it. I can take the dividend to reduce the premium. And I'm only doing those things if I don't understand banking. And the most powerful thing that you can do is have the dividend be paid to the paid up additions rider straight to the cash value, increases the cash value, increases the future dividends, increases the death benefit. So we're creating this, we're really accelerating this ever increasing compounding interest and dividends accumulation.
If you found this video helpful, please leave a like. And if you want to see more videos like this, you can subscribe to the channel. If you want to learn more about infinite banking, you can watch this video next, or visit our website at bankingwithlife.com. Thanks for watching. We'll see you guys in the next one.